The Samsung Emerging Asia Equity Fund is an actively managed fund. It is a long-only relative return fund benchmarked to the MSCI Emerging Asia Stock Index. The MSCI Emerging Asia benchmark comprises 8 countries: China, Taiwan, Korea, India, Malaysia, Indonesia, Thailand, and the Philippines. The fund is structured and managed using a bottom-up GARP investing style. GARP is growth at a reasonable price, and stocks are assessed and selected based on their future growth prospects relative to their valuations. A GARP stock should place in the upper left-hand quadrant of the growth value matrix, where growth is above the market average, or where growth is accelerating, or where growth is expected to exceed consensus expectations, while valuation is cheaper relative to the market, sector, or relative to the company's historical stock valuation range. The outlook for emerging Asian equities is positive because the market's recovery is supported by falling COVID infections, low interest rates, and US fiscal stimulus. Regarding the COVID situation, COVID infections started to stabilize with the discovery of several COVID vaccines, and infections should begin to decline with the rollout of mass vaccinations. This paves the way for the gradual reopening of economies over the next 12 months. Meanwhile, the Fed is not expected to raise interest rates over the next 3 years because the majority of Fed members do not expect to raise interest rates until 2024. The Fed's policy priority is growth and employment recovery, and it is willing to tolerate a period of inflation overshoot in order to support a stronger and more sustainable economic recovery. Also, US fiscal stimulus under the new Democrat government is expected to produce a record budget deficit. Fiscal stimulus under the Biden administration involves household income support for those impacted by the COVID pandemic and infrastructure spending. The global economy is expected to recover over the next 2 years after contracting last year from the COVID shock. The global economic recovery is supported by the 3 aforementioned factors: gradual reopening of economies from mass vaccinations and declining COVID infections, Fed monetary stimulus with no rate hike expected over the next 3 years, and US fiscal stimulus with the budget deficit expected to widen to record levels. With the help of economic reopening from mass vaccinations and policy stimulus, the global economy is forecast to recover the lost GDP from the COVID pandemic and is even expected to surpass the pre-COVID GDP of 2019 by the end of this year, 2021. The global economic recovery is expected to lead to moderately higher inflation. Moderately higher inflation creates a Goldilocks investing environment where asset prices reflate without the threat to growth from higher interest rates. Economic reflation is supported by fiscal stimulus and low interest rates, with central banks reluctant to tighten until the post-COVID economic recovery is well established. Emerging Asia market earnings should begin to recover with the global economic recovery and reflation after 2 years of declining earnings. Emerging Asia market earnings contracted over the past 2 years due to the impact from the 2018 to 19 US-China trade war, which was then followed by the 2020 COVID pandemic. When emerging Asian equities recovered after the 2008 Great Financial Crisis, also with the support of global policy stimulus, the stock market rose significantly over a 2-year period. In the present day, emerging Asian equities have recovered for only 1 year, and the returns are still below the returns achieved after the 2008 Great Financial Crisis. Emerging Asian equities have potential to outperform world equities when there is synchronized global growth and reflation. Emerging Asian equities strongly outperformed world equities for 2 years after the 2008 Great Financial Crisis. The fund's investment strategy is focused on sector allocation because the cyclical growth sectors are expected to outperform in a post-COVID economic recovery. The fund is overweight the technology, materials, and industrial sectors and plans to actively select GARP stocks in these 3 sectors in the forthcoming synchronized global recovery.